A very powerful strategy to trade vix75. To scalp vix75 on the 1 minute time frame and make so much money on daily basis. That is what I want to share with you guys. Using these two moving averages in a very rule-based manner, you are going to be able to milk the market with ease. First of all, this strategy is going to make it very easy for you to know what to look out for in the market. That is why I believe this strategy is one of the best out there that you can find. So stay with me, let me show you how this strategy works. Meanwhile, smash the like button, subscribe to this channel, drop your comment in the comment box, turn on the post notification bell, and check the description box. There is a link to my Telegram channel. Hit that link, click the link, and be taken to join my Telegram channel. Okay, so from time to time we do giveaway on this channel. So what I want you to do is to partake in the giveaway. The conditions of our giveaway is that from time to time we check the persons with the highest engagement on our channel, okay, especially on a particular video like this one. Now the person with the highest engagement, the person who comments the highest, who shares it the highest, and who likes it the highest, I look for the person and then select the person and then give the person a gift. The last person that just won a free trading robot for himself, a robot that makes massive profit. Just check the Telegram group, check our Telegram group. You are going to see the performance of the robot. You're going to see the performance, and I gave it to him. So right now, begin to engage on this channel, and you might just be one of our lucky winners this time around. Okay, so look at this, guys. I use this strategy I'm talking about to take this trade, and you can imagine what is happening here. You can imagine, just take a look at what is happening. Look at what is happening, guys. It is massive. It is massive. Here are the rules of the strategy. The rules of this strategy are very simple, very simple. First thing you want to see is that the moving average cross each other, right? If you want to sell for a sell signal, you want to see the red moving average cross below the blue one. Then for a buy signal, you want to see the red moving average cross above the blue one. The red is 20, while the blue one is 50. Okay, so after you see the cross, the next thing you want to see is that a structure has been broken, right? You want to see a structure broken. As you can see here, a structure was broken right here. Very easy, very clear, easy to spot out. Now the next you want to wait for is for a pullback to this place where the moving average is crossed. Once price pulls back there, you are ready to enter. But the next thing now you will see, which is the fourth and last rule, is that this moving average during the pullback was not able to cross the 50 moving average, right? The red one was not able to cross the blue one. Once that is done, then that is a perfect signal. So you quickly do what? You quickly sell. So as soon as you see this, it is time to enter. Quickly take your entry, sell, and make your profit. That's it. Sell massively. That is it. Now let me do some back tests and show you. Let me just show you. Look at it again here. The moving average crossed here. The 20 moving average crossed above the 50 moving average. Then we also see that here this structure was broken. This bigger structure was broken also, which is a better confirmation. Then there was a pullback to this place where the moving average crossed, and during the pullback the red moving average did not cross again below the blue one, which means it is a valid signal. And then we enter our buy here, and then boom, you can see we ride the trade up to this point. You see, that's it. Now it is very simple. Let's see again. Okay, we have another one here. Look at it. This one was very small, so the moving average crossed below here, and then structure was broken, and there was a pullback to the point where they crossed here, and then during the pullback the red moving average did not cross the blue one. Then you quickly do what? Sell. As you sell, place your stop loss above here, and then this is it. Make your profit. It's as simple as that, guys. This is not complicated at all. It's not a complicated strategy. It's a very simple one. The same thing happened here again. We had a break, we had a cross below here, then break of structure here, then price pulled back to the place where this thing crossed. This is it, and then you sell. And during the pullback, the moving average did not cross, right? Then you sell, and that's it. If you sell, making profit, right? The same thing. This has one. Okay, the same thing here. The moving average crossed here. Structure. Oh shit. Structure was broken. Then there was a pullback to this point where the moving average crossed, and then during the pullback, the moving average here did not cross, right? So you quickly buy, and you are making profits. That is it, guys. This is so simple. This is so simple. You can see I used it to enter this trade that is on now. You can see we are still making profit. Okay, this is same thing here. Cross below, break of structure, pull back to this cross below point. Then the moving average not cross again during the pullback, and then you sell. You are making profit, right? The same thing. Let's see. It keeps repeating. This is it. Break of structure. This is the crossover point. Pulled back to the crossover point, and then the moving average did not cross during the pullback, and then you see what? You buy. That is it. You buy, and you can see profit. So it keeps happening over and over again, almost every day. We keep seeing it, guys. So this is it. There's no point continuing to show this thing, because you can just backtest it exactly this way I've shown you. Just go to your demo account, check it, use it to trade for some days. At least if you can use it to trade every day for 1 week on your demo account, you will see how it works, guys. You will see how it works, and I'll show you you're going to make money with this strategy. I'll show you of that. Okay, I'll show you of that. Now your risk management is key. Risk management is key. Okay, because you can see what is happening here. This thing came down here, giving me some profit, and it's going back up. This might go and then hit my stop loss, but look at the space here. Look at just few pips here. It's not much. So if I lose it, and the loss size is not much, if I lose this, I won't blow my accounts. So you must manage your risk very well. But if it goes my way, as we all know, no strategy works 100%. So there's a possibility that it will hit my stop loss, and there's also a possibility that it will go my way and I will take profit. Okay, like I want to take profit when this red one crosses this blue one. That is what I want to do. That's when I want to take my profit. So if this happens that it goes my way and I take profit, then you see that the profits will be more than what I risked. That is just it. For instance, here you can see this is it. This was the entry point, this was the entry here, and then this was a stop loss. If this thing hits stop loss, it is very small. But imagine you held the trade to this point where it's to this point here, to this point. Okay, let me just bring this in to this point. You held it to this point. Can you compare this with the? Can you compare it with the risk? No, this is like 2 to 3 times the risk. So that is the risk management we are talking about. You have to make sure that the loss size and the number of pips will be enough, will be small enough to will be something that your account size can contain. Okay, it's not something that once you hit your stop loss, or when it is going to hit your stop loss, your account will be blown off. No, manage your risk properly. That is the most important thing in trading, risk management. For instance, sometimes I fund my account with $100. This is what I do. I'm telling you guys how I manage my own risk. Most times I fund my account with $100. If I fund my account with $100 like this, what I do is I'll tell myself, okay, I want to risk only $10. Right? I want to risk only $10 in each trade. Now, if I'm risking $10, before I enter a trade, I will calculate between my entry point and my stop loss. How many pips is it? And what is the loss size I will use to stay within this $10? It can be less than $10, but it should not be more than $10. That's what I do. Now, you discover that if I follow this, I will have to lose my trade 10 consecutive times. I have to have 10 consecutive losses, right? I have to have 10 consecutive losses for me to blow this this $100 account, for me to blow it. Okay, so this is how I manage my risk. Sometimes I might decide that, okay, it's going to be just $5 risk, okay, for that $100 account. I'm going to be risking only $5. This means I will have to lose 20 consecutive trades. 20 consecutive trades before I can blow this account, before I can blow my account, right? And believe me, using this strategy, you are hardly going to blow your account using this strategy. You will lose most of the time. Some of the times you might lose. Yes, it is normal with every strategy. You can lose, but it is going to be hard for you to blow your $100 account using this strategy and a good risk management, exactly the way I've shown you now. So make sure you use good risk management and stay disciplined. Okay, stay disciplined within that risk management, right? Don't be jumping from one strategy to another. Just pick one strategy, apply discipline to it, maintain good risk reward ratio, and then maintain good risk management. That is just all you need, guys, and you'll be making profit from time to time. You discover that over time your profit will be compounding, because there is no strategy you are going to see in this world that doesn't lose. Okay, no strategy that doesn't lose at some point. SMC, that smart money concept, ICT, all of them, indicator trading, all of them, they lose at some point. Okay, you see now we hit SL. This one hits SL after giving us some profit. Okay, so you see that was actually the reason I held this trade up to this point, so that you guys will see that it's possible to lose, right? Anybody can actually lose, but what matters is the risk management you apply. Now look at this. This structure has been broken here. I want to see price return again to this place, and then I will buy. Then that is if this moving average did not cross back. If this moving average did not cross back here, then I will buy. But if it crosses back, I will not buy. So that is it. I held this trade up to this point to just hoping it will hit SM, so that you guys will see that at some point we do lose. But what matters most is the risk management. That's why I had to hold this trade, and I believe you guys have learned something, because it's not every time we come here to show you guys profitable trade. There are also losing trades, right? There are also trades that we lose. So you must get used to it. As a trader, you must get used to losing trades at some point, but we must make sure that what you are losing is not your capital. It is the one that you collected from the market, that you are giving back to them a fraction of it. That's how to stay consistently profitable. Good. Okay, so thank you guys for watching. If you learned something from this video, let me know in the comment box below, right? And smash the like button. Thank you guys. This is the Alpha Trade. Bye.